Abdul Garba joins us from the trading floor at DLM to give us his thoughts on the early markets performance today. Thank you so much, Abdul, for joining us.
Thank you, Ole.
All right, so Abdul, your take on the recovery we're seeing in this market over the last few sessions?
Yes, we have to look at it from the position we had. We actually saw this coming in terms of the rally sustaining toward the end of the year. Why? Because the last quarter announcements were slightly were good, especially for the bulk of for the larger stocks within the index, being Dangote Cement, Zenith Bank, and a few other large capitalization stocks.
All
so
right.
give it that
Okay.
was good.
Okay, so the market is likely to trade higher in your view, but how much higher going into the rest of December? We know we're coming into the holiday season. Your take on how well this market is likely to trade over the rest of this month?
Well, we're seeing some relaxation by the larger capitalization stocks. I mean, the more popular ones that are found in portfolios, both domestic and international, especially international. These are the banks and the conglomerates, food and beverages, where we have the likes of flour mills and, of course, Zenith Bank and the whole host of names of companies worth over 100 billion naira. With these ones, we're seeing some relaxation in that. We've seen some awakened attention to the oil sector, and more recently, as mentioned, you have Eterna Oil joining the ranks of gainers, especially as much of its other competitors or co-markets, co-industry participants are also enjoying the benefit of the ride.
All right, we've seen some numbers out of the insurance sector. Continental Insurance reported modest growth, like I reported earlier in the show. So your take on the sector as an investment opportunity for those looking to diversify away from the banking sector, away from the pretty richly priced consumer stocks?
Well, the whole thing about the question about investing in insurance, it has to do with the potential for it. Yes, there's a lot of potential for insurance stocks. There's a lot of business to actually play in a growing economy, an evolving business environment and all, and then faced with all sorts of risks, especially in trade and in production. So with the underdevelopment there always is this potential there for the insurance companies. Well, what remains a concern for the industry as a whole is the level of transparency on disclosures.
All right, of course, that seems to be improving though with the adoption of IFRS reporting standards in that sector. But let's move on to your take on developments elsewhere across the world. We're seeing the OPEC meeting holding today. Of course, whatever happens with the price of oil and, of course, oil production in Nigeria has significant implications for the macro story here. Your take on the stability of the macro story, especially around developments around oil in Nigeria?
Okay, it's a tight one there. If we end up with lower oil prices, we end up with lower amounts to save up, essentially, to defend both our reserves and basically finance any other account, the ECA account, the excess distributions we have. That also threatens, if it goes even lower, that threatens financing basically, but of the budget. But given the current level, the proposed level, above 70 years, but still sufficient to finance the budget.
All right, what about
on its own.
What about your take on what some people have coined the T word, tapering, going into next year? That's a key risk a lot of investors have highlighted for Nigeria and, of course, the rest of the emerging markets world. Your take on the likely outcomes of what is going on in the U.S. and how it could impact our markets over here?
Okay, tapering basically is a risk faced by emerging markets and more to the fixed income side because it's more liquid, it's more ready for exits, and then you have shorter and fixed time horizons for such investments. But portfolio inflows that face equities, on the other hand, usually do not, take as fast a bang. Each frontier market or emerging market may be able to defend. Each company may be able to defend its own valuation based on a long-term interest and on its level of integration with the global markets. So that's the turn it's likely to take. Fixed income first, and then.
Okay, Abdul, very quickly, if you can just wrap up for us, the stocks you like right now, given where the market is trading at the moment, which stocks do you like?
Currently, I'll stick to the cement sector. I like WAPCO, Dangote Cement, high ROE, high potential for growth. Yes, good outlook for what's coming to them. We'll take a slight slowdown on banks because of essentially what they're having to face, some loss of public sector funds, and then accounts, and basically making up reserve ratios. And then, yes, we do see the possibilities of trying to match up inflationary trends next year. So, given that might threaten their earnings.
All right, Abdul, let's leave it there. Thank you for joining us on CNBC Africa today. Abdul Garba from Don Larry Merrifield talking us through investment opportunities in Nigeria's equity market.